Tesla just posted one of the most eventful earnings reports in years. The stock rallied 30% and the company just announced massive changes for the future. So naturally, people are asking, is this the bottom? Should I buy more? So now that the dust has settled, let's look at the 6 things we need to remember from this earnings report, why some people argue that these are great results, while others are saying things are still bad, and of course, what's next. And the first thing is that Tesla had a bad first quarter as it missed the analysts' expectations. Revenue came in at $21.3 billion and earnings per share at 45 cents, both below Wall Street's estimates. Tesla had a weak quarter in terms of production, producing 2% less cars than 1 year ago, but also in terms of deliveries, delivering 9% less cars than in the first quarter of 2023. And there were some legitimate reasons for why the production was lower, like the Red Sea conflict, the Berlin attack, and the ramping up of the Cybertruck and the Model 3 Highland in the US. But considering that Tesla still couldn't sell all its production without cutting prices, it becomes evident that there are still problems with the demand. And while the whole US auto market is feeling the slowdown, EVs are the most affected. In the first quarter of 2024, sales of electric vehicles grew only 2.6% in the US, and things are now looking better for the second quarter, as Tesla just cut prices again just 2 weeks ago. So besides cutting prices, what is Tesla doing going forward? Well, Tesla did one great chess move that I'm going to describe later that might increase demand. But besides that, the second thing to remember is that Tesla is cutting costs and trying to stabilize margins. A good example of improving margins is in the energy segment. After hitting a gross margin around 25%, the energy business is expected to post tremendous growth going forward.
We expect the energy storage deployments for 2024 to grow at least 75% higher from 2023.
But for the auto segment, it is not that easy. Still, in the first quarter, excluding Cybertruck and unscheduled downtime, the cost of goods sold per vehicle declined, primarily by lower cost for raw materials. As a result, the auto gross margin was 16.4%, but still significantly lower than 18.9% from 1 year ago. But this is mostly because of the ramp-up of the Cybertruck and the Model 3 Highland, which are costs not related to the demand.
Auto margins declined from 18.9 to 18.5%, excluding the impact of Cybertruck. If we exclude Cybertruck and Fremont Model 3 ramp costs, auto margins improved slightly.
Still, the operating margin hit a new low around 5.5%, which forced Tesla to take some drastic actions to lower cost.
We had to make the hard but necessary decision to reduce our headcount by over 10%. The savings generated are expected to be well in excess of $1 billion on an annual run rate basis.
And all this comes back to the original problem, and this is the third thing to remember, that the demand for new vehicle sales is low, but we might be towards the end of the cycle. A survey from Cox Automotive showed that the recent slowdown in vehicle sales is happening because of interest rates and the economy. So this will probably pass once interest rates will drop, and we might be close to the end of the down cycle. But now the only disadvantage for electric vehicles remains that they are still pricey, especially since consumers are less willing to buy a new car. And even if Tesla's prices are now close to the average combustion engine car, there is only so much price cuts that the company can apply before destroying margins. This is why the fourth thing to remember is that Tesla has fast-tracked the next growth phase. And this is the last piece of the Tesla auto puzzle, and it will unlock a whole new market. I'm talking of course about the last 2 vehicles in the Tesla fleet, the cheaper Model 2 and the Robotaxi.
We've updated our future vehicle lineup to accelerate the launch of new models ahead of previously mentioned start of production in the second half of 2025. So we expect it to be more like the early 2025, if not late this year.
While these are great news for investors, there's one more thing that I believe was not fully appreciated by the market, and I want you to listen to it closely because this will have a major impact.
These new vehicles will use aspects of the next generation platform, as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. So it's not contingent on any new factory or massive new production line. It'll be made on our current production lines much more efficiently.
This is very important because it means that Tesla doesn't need to create a new production line, and the ramp up of the manufacturing will be much faster than for other models like Model 3 or the Cybertruck. The fifth crucial thing to remember is Tesla's price cuts on the FSD. And while this might seem like a negative thing, it is aimed at increasing the take rate amongst Tesla owners, which is estimated to be only around 10%. But the true FSD news is this chess move that Elon Musk made in April.
Regarding FSD version 12, we've now turned that on for everything from Hardware 3 on in North America. So it's been pushed out to, I think, around 1.8 million vehicles. And we're seeing about half of people use it so far. And that percentage is increasing with each passing week. So we now have over 300 billion miles that have been driven with FSD V12.
Can we talk about the brilliant tactical move done here? Because by deploying FSD for a free trial, two important things were achieved. Firstly, this is the perfect marketing move, as Tesla owners are more willing to buy FSD since they can test it hands-on. Well, actually hands-off. But secondly, Tesla gets more training data as people will report faulty scenarios that will make the software better.
With a constant feedback loop, every time something goes wrong, that gets added to the training data, and you get this training flywheel in the same way that Google search has the sort of flywheel. It's very difficult to compete with Google because people are constantly doing searches and clicking, and Google's getting that feedback loop.
But besides the new training data that Tesla is going to obtain, this shows another important aspect about Tesla, which is that the company is going all in on solving FSD.
If somebody doesn't believe Tesla's going to solve autonomy, I think they should not be an investor in the company.
And this is the sixth thing to remember. Tesla invests immense amounts of capital into buying the hardware needed to train its AI. After already investing billions, Elon Musk estimates that Tesla will invest close to $10 billion in 2024, but what's more impressive is that the FSD is becoming better really fast.
We do have some insight into how good the things will be in, like, let's say 3 or 4 months, because we have advanced models that are far more capable than what is in the car, but have some issues with them that we need to fix. So they're like, there'll be a step change improvement in the capabilities of the car.
Considering the immense investments done in hardware and the fast pace of improving the software, Elon Musk concluded that for now, the only barrier to achieving level 5 full FSD is time.
Well, I think no matter what, Tesla, even if I got kidnapped by aliens tomorrow, Tesla will solve autonomy, maybe a little slower, but it would solve autonomy for vehicles at least.
As a result, this fast improvement will put Tesla in a good position to someday run its own fleet of robotaxis, which might unlock immense potential.
Tesla will be operating the fleet. Think of Tesla like, I don't know, some combination of Airbnb and Uber.
To sum up, this was the quarter when Elon Musk managed to shift the attention of investors from the demand slowdown to the immense potential of FSD. I believe that on the short term, the stock will be volatile because of the demand difficulties, but on the long term, it remains one of the best risk rewards that you can find in the stock market. I own Tesla shares and I'm looking to buy more as the stock drops. If you feel like you've learned anything of value or you want to see more analysis like this one, please hit that like button and subscribe.